you've been in the finance world for 20 years, and in that process, you'll have had to unlearn a lot as you've ventured into this Bitcoin world.
I wasn't looking for an investment today, I was looking for an investment 10, 15 years. And so when I was looking at things like that, I was like, what is the future holding for us? And I thought digital currency. I made all of those mistakes. I made lots of money, lost lots of money, hacked, rug pulled, all of the above. And I sort of was left with back to where I started. Miami 22 was my Bitcoin orange pill moment. I met Safe Dean at the time. I read the Bitcoin Standard in 4 days while I was in Miami. My wife commented that she'd never seen me read a book so fast. I worked in money for 20 years, never understood it. Didn't understand how it came about, didn't understand the history. And then I realized that inflation was just eroding money away. And actually, as Saylor said in 2022, real-time inflation was probably, he said 15%. So he said 10 to 15%. If you've got a FTSE tracker fund, for example, and it's doing 8%, well, actually, you're losing money every year still. It might look great, but you're losing spending power every year. To get into Bitcoin, the one thing you need is an open mind. And a lot of people...
Welcome back to the show. Today, I'm with Robin, the Bitcoin accountant. So if you're watching this and you're stacking sats, you're paying in Bitcoin or accepting Bitcoin as payment, then this is your episode to get a masterclass from a man who does it for a living. Robin, thanks for jumping on. Before we get into what you do and talk a bit more about the accounting side of this space, I just want to touch on what we talked about a bit off camera first, of your journey into Bitcoin through the crypto world, and perhaps what your main lessons were there that the audience can get a few nuggets from that a lot of people have on that journey of crypto and then actually know it's Bitcoin.
Yeah, of course. So, I mean, we all, there is an expression in Bitcoin that we all have our altcoin phase. I won't swear, but our altcoin phase. And I think that's relatively true. The journey I took, and as I said to you off camera, Finn, I was looking for, at the time I was in investment, so stocks and shares. And one of the things I was looking at was when I was looking at Tesla, for example. Tesla, very future orientated. You know, what I wasn't looking for an investment today, I was looking for an investment 10, 15 years. And that was my long-term horizon. So when I was looking at things like that, I was like, what is the future holding for us? And I thought digital currency. I don't think we're going to have pound notes forever and you know, physical coins. We're already contactless majoritively, so I think that's only going to grow. So digital currency makes sense. So that you know, took me into the crypto sphere. I made the mistake that most people do. I probably, you know, it's equivalent. It's like a gambling high. You make a bit of money and you know, you 10x your money. It might only be 10 quid and you make 100. But you're high, you're thinking, this is like, I could do it with 1,000 quid and get 10 grand and, you know, all of those sorts of things. I made all of those mistakes. I made lots of money, lost lots of money, hacked, rug pulled, all of the above. And I sort of was left with back to where I started, scratching my head. And I went to I travel for work, but I went to the Bitcoin conference in Miami 2022, watched Michael Saylor speak, and he spoke to me in this plain language that I just understood. And Miami 22 was my Bitcoin orange pill moment. I met Safe Dean at the time, got the Bitcoin Standard. I read the Bitcoin Standard in 4 days while I was in Miami. My wife commented that she'd never seen me read a book so fast. It was just, that was the moment. And I realized after reading the Bitcoin Standard, I'd never understood money. I worked in money for 20 years, never understood it. Didn't understand how it came about, didn't understand the history. And then I realized that inflation was just eroding money away. And actually, as Saylor said in 2022, real-time inflation was probably, he said 15%. So he said 10 to 15%. You need to be beating 10 to 15% to be able to outpace inflation. Anything, if you've got a FTSE tracker fund, for example, and it's doing 8%, well, actually, you're losing money every year still. It might look great, but you're losing spending power every year. And that was like the moment where I went, well, actually, yeah, what else is there? And yeah, I've been down the rabbit hole ever since. I always say Bitcoin is a journey and no one's at the end of it. And I'm still on that journey. There's people much more advanced than me to speak about it, but that's where I am on my journey. And I'm fully ingrained in Bitcoin now as not just the future, as a peer-to-peer cash system, as a a medium of exchange, and as a store of value as well.
Absolutely, man. And I'm with you that it's an amazing journey to be on, but it's a never ending journey where you can just keep learning and learning. You've been in the finance world for 20 years, and in that process, you'll have had to unlearn a lot as you've ventured into this Bitcoin world. So I always have loads of respect for people that have a background in finance, because there's so much more unlearning than just someone that's not got that experience. So could you touch on that a bit? And then also on the everyday person that might not have a finance background, but they still have to do a lot of unlearning to start going down the Bitcoin rabbit hole, and what your advice would be for people to start asking questions and expanding their horizon.
Absolutely. So you're absolutely right. In the traditional finance world, the one thing I will say to get into Bitcoin, the one thing you need is an open mind. And a lot of people won't have that open mind. If you've done something for 20 years, to be told that your understanding is incorrect is hard. You know, I do try and talk in traditional finance world, and I have to take a very careful approach, because it's like if I walk in and go, Bitcoin is the answer. I'm a 40-year-old man that I've only had my own business 6 years technically, and I've been in business a long time because I'm an accountant. But you know, people will look at me and go, look, I'm an entrepreneur. I'm 55 years old. I've exited 3 successful businesses, and you're telling me I don't understand money. Go away, young man. You know, that sort of thing. And I expect that. I understand that. So your approach has to be very different. It's not about Bitcoin is a spectrum, and you have to have that open mind to go into it. So where do you start is the question. And this is a conversation I had with Joe Bryan, if you know who Joe is,
He's
last
on the
last
pod
year.
and next week.
Yeah, so I'm a big fan of Joe. Joe spoke to me very early on his journey, and he already had this seed of an idea. And funnily enough, we sort of had a shared value, because I said to Joe, when I speak at finance conferences in traditional finance world, I take a different approach, which is not, here's the answer. I want you to tell me what the problem is. And Joe went, funnily enough, I've got this video that I'm making. And I was like, oh, wow. And he showed it me a screening a bit later on. And I was like, wow, like, you know, you fit so much into 45 minutes. It's like saying, can I, in a 15-minute conversation, can I orange pill someone? No. In a 40-minute video, you can have a go at teaching someone what the problem is. And that's where I'd start for anyone, especially in the traditional finance world. Just ask yourself, what's the problem? And then worry about the solution later. And that's sort of, you're absolutely right. One of the things you hit on the head there is in traditional finance, in the world in general, in education, in schools, we're taught so much that is wrong, or we missed out on so much that is essential. You know, what money is should be essential, but they probably don't want us to learn that, because then you realize that money printing exists and inflation is created, not something you have to live with. But then we're also taught other things. So when I was very early, and you know, we look in investing, for example, we're taught diversification. So you know, you're going to have 10 asymmetric bets, and the likelihood one will do very well, one might not do so well, and then you've got a few in the middle that do okay, and your net result is, you know, you'll make a few percent a year. Well, why does that have to be? And why does it make sense if you're still not beating inflation and losing spending power? So actually, one main calculated bet would make more sense. And you have, but that's years of unteaching. Diversification was the hardest thing to unteach myself, because, you know, I was like, well, I need to have a bit here, a bit there, because what if this goes wrong? And actually, that's you know, that's something we're taught and it's ingrained, but it doesn't mean it's right. So all of those things are really important. But I think short and sharp, you know, 40-minute videos, or even less, that give you the background of what we're trying to say are really important. And then once you ask yourself that question, you can start reading, you know, Broken Money, which is, I love Broken Money, but it's quite a read if you're not straight there. The Bitcoin Standard, the Big Print, you know, those three are always my go-tos, but you need to have a will to want to read them.
Yeah, What's the Problem is absolutely amazing. So that's my go-to, and then the Big Print's number two, because they complement each other quite well, and they're both very digestible to get started.
Two of the nicest people in Bitcoin as well. Larry, I don't know him personally. I've met him twice. He's the loveliest guy in the world. And Joe Bryan, I want to be Joe Bryan, because he's so calm when he talks. Like when I get into a debate with someone in the traditional finance world, I get so passionate and emotive. Joe's the most calm person all the time. His argument is measured. He's so clever. I love Joe.
Yeah, he's amazing. I can't wait to have him on next week for the pod. It's going to be cool. So let's move on. Let's get into a bit about what you do. I've got some questions for myself, and then hopefully they can apply to some people watching to get some wisdom, because understanding Bitcoin's the first thing. Hopefully most people are just stacking and not selling, so there's no taxable event that's going on. I'm looking forward to picking your brains here. So let's start really basic. If I am just buying, I've got a DCA set up where I'm buying every week or every month, and that's the thing. Where does that leave me in terms of, do I need to declare any tax, or can I just keep doing that and not have to worry about anything?
So a DCA strategy where you're only buying, there's no sell, swaps, trades, spends, you're absolutely fine. You won't need to file anything. What I would recommend though is treat it like a business that you're bookkeeping. Keep records. I don't mean keep like, every single, but dates, buy prices or amounts, they're essentials. And the reason I say this is what I see a lot in Bitcoin. If we go back, when I speak to OG Bitcoiners, let's use local Bitcoins as an example, which is an old exchange that people used to use. Records are hard to come by now. So if I've seen a lot of people DCAing early on that are getting to maybe an age or a time now where they want to sell some, and they can't prove where they bought it, and they can't get their buy prices, and that's very difficult. That means my job's difficult. It means that their life is difficult when they need to prove it to someone for compliance, because anti-money laundering is a big thing. Whether you agree with it or not, it doesn't disappear. And then tax, you need to have those records. So if you're buying, that's fine, and you're just hodling, don't worry about it. But make sure periodically, whether it's annually, whether it's more regular than that, you download the records into a statement or a CSV, an Excel spreadsheet, ideally. And then it'll be easier when the time comes to sell. That's the main piece of advice I'd have.
Awesome. Yeah. And I know a few exchanges are getting much better at making the tracking easier for people to keep track of that stuff. So my next question, I guess, is what do the governments know?
At this moment, they know it exists and they know the tax on it, and they know little snippets. So certain exchanges will report things to HMRC and things like Robin has deposited over $5,000 in a year. That's the level of data they'll get at the moment. So it's sort of giving them data to trigger what they might need to look at. If I've deposited, and I haven't, by the way, but if I've deposited $100,000 in a year into an exchange, HMRC might see that and go, well, hang on, he's not declared anything to do with crypto, so we might want to take a look just to make sure that he's doing everything right. They're sending out nudge letters at the moment. They've been doing that for a couple of years. That's just to say, almost scare people, say, you need to pay tax on crypto. And then people go, actually, I might have made a bit of money here, and HMRC know who I am. They're trying to increase knowledge of the fact that crypto is taxable and that people should be keeping records and keeping on top of it. So yes, those letters do scare people because no one likes a brown envelope, but that's where they are at the minute. They are going to get more data in the future, though. From 2026, any UK, actually, it's quite an EU-wide thing. It's actually, more than that. It's an international thing. Exchanges are going to start reporting customer data to the relevant tax authorities, and then more data sharing will be happening. So one of the big myths I see is when people go, oh, I'll take it offshore. Well, if you go offshore to Coinbase in, I don't know, Sweden, and then Sweden reports it to their authorities, HMRC still have the right to ask Sweden and go, has this person got crypto activity, because they're a UK tax resident and they should be paying tax in the UK. So offshoring doesn't necessarily take it out. But what they're going to start getting is reports. So if I'm with Coinbase and I deposit 10 grand and buy Bitcoin and then send that Bitcoin on somewhere else, they won't get wallet addresses, but they will see what I've done, that I've deposited 10 grand, bought 10 grand of Bitcoin, and then withdrawn it off somewhere else. So they're going to start getting more data. Profit and loss records. Now, profit and loss records is subjective because it's profit and loss from the exchange only. They can't get data from anywhere else, but they are going to start sending that to HMRC. Now that starts in 2026, but the actual reporting of it will be 2027. But the idea of that is HMRC are going to have more data to start inquiries on people who they think may not have been compliant. And we think there's probably a large portion of people who aren't compliant at the moment.
Yeah, wouldn't surprise me, not at all. So with these new changes coming into place 2026, 2027, does that mean they can backlog from when that comes live, or they can only start these more intense reports from that date forwards?
They won't be backdating. The reason being, the exchanges, as far as I'm aware, will be building reports to send. So they won't want to create more work for themselves by backdating. So the reporting period starts in 2026. Obviously, like I say, they can still hand over some data, but the main bulk of more data will be from 2026. And I think the first reporting period ends in 2026, and it has to be sent to HMRC by, I think it's around May 2027.
So I might be completely wrong here, but am I misunderstanding you that anything before these reports, the government can't currently track? Where they could know that you've deposited a certain amount of fiat into your exchange account and bought, say, Bitcoin, but they can't then track the wallet addresses that are storing that Bitcoin now. So if you've sent off an exchange into self-custody, my understanding was that they know that you've got that in self-custody.
So they can probably do some chain analysis. The idea, so we've got to bear in mind, this is blockchain, right? Blockchain is immutable data. It's an immutable chain, and it's easy to trace. So they only need one piece of data to really find out who you are. So at the moment, we've had it, it's been assured that they're not going to be providing wallet addresses specifically. But that doesn't mean that they won't have enough information to go away and find something on you and therefore create their own chain. It might be totally wrong, I don't know, but they have the ability to go and do that. I don't think you're absolutely right. I don't think they'll be getting wallet addresses, etc., as a matter of course. But then they do, if they have information that says, right, I've bought 20 grand of Bitcoin and withdrawn it, they can come to me and ask me, and then they can ask me for records. And then do I want to start arguing with them, or do I want to provide them records? People will say to me, I don't have to do this, I don't have to do that. The answer to that is, how far do you want to push it? Because ultimately, HMRC have the power to take to tribunal, make your life difficult, and then take you to court. Whether you agree with it or not, I'm not saying I agree with it. I'm saying that's the possibility. So unless I'm willing to go that far and fight it, I would probably comply, because I'm not hiding anything. I'm not trying to hide anything. The difficulty with this is, privacy isn't illegal. There's nothing wrong with being private, but people will feel insecure when HMRC are asking for their data, understandably. So the answer is they won't get it as a matter of course, but they will have an absolute option to ask you. And I think that's where they're going to start. I think they're going to start with more inquiries into people. I don't mean deep diving. I mean high level inquiries into people, where they start asking for data from people. And then the difficulty is, how much do you want to provide? And if you don't provide it, how far will HMRC push it?
Super interesting stuff, man. And I think, like you said, it doesn't necessarily mean that everyone agrees with it, but they're the rules. So it's kind of up to the individual how they want to go about how they treat their Bitcoin and what processes they follow. But I think it's amazing stuff that you're doing, helping people that do want to kind of be compliant and navigate with that. And your transparency is pretty clear with that. So if we move on a bit now beyond kind of the basics, because from my perspective of things, someone that's just getting into Bitcoin probably isn't going to straight away be looking at accepting Bitcoin as a business, for example. They're going to just work out how to buy Bitcoin to start with. But if we do move on to that and someone's got a business, they decide that they want to start accepting Bitcoin as payments, what does that look like in terms of income tax? Then if they're purely accepting Bitcoin and that's their cash flow, but then they need to swap to fiat to pay bills, pay staff, or whatever, what are the key things that people need to look out for to be tracking with that?
Well, firstly, when you're accepting Bitcoin, that's where I'd say you probably need to speak to a savvy, understandable accountant, right? Because one of the big hurdles at the moment I see is incorrect advice, right? And that's because people don't understand the asset. Bitcoin in HMRC's eyes is not a currency. So whether I agree with that or not, in HMRC's eyes and tax rules, it is not a currency. It's the equivalent of accepting a commodity or an asset in exchange for services or otherwise. What that means is Bitcoin always has a GBP equivalent, and the GBP equivalent is what matters. So, for example, if I say to someone, right, you can pay me 1 Bitcoin for what I'm going to do for you, HMRC doesn't care that I've said 1 Bitcoin. They care about the GBP value when I get that money in or when I invoice it. So if Bitcoin is £80,000, I'm receiving revenue of £80,000 when I receive that, right? That's what matters. It doesn't matter about how much it's worth now, later, tomorrow, whatever. Then what happens is, from an accountancy perspective, you have another transaction. So when you get £80,000 for 1 Bitcoin, I've technically got £80,000. Then on the other side, I've invested £80,000 into Bitcoin because I've chosen to keep my money there. So that's then an investment. That's a new transaction. If I then sold Bitcoin tomorrow for £70,000, I've got a loss on my investment of £10,000. They're separate transactions. So you need to understand that the receipt of Bitcoin is in GBP equivalent as at the time. It doesn't matter that it's Bitcoin. If you then choose to keep it, that's an investment. If you choose to trade out of it into GBP for any reason, for cash flow, etc., that's a cashing out of an investment. So the accounting treatment then can become more complex, but it's also important.
Super interesting. So how does that then work? Let's say we've got a self-employed individual. They've not got a big business. They're just accepting, let's say they're a personal trainer, easy example, and they're getting paid in Bitcoin. So each time the Bitcoin hits their account, the cash equivalent is their revenue, but the business has received that revenue. So do they have to be careful about where that Bitcoin's stored as opposed to business versus as an individual? What does that kind of look like?
So the words you use there, I have to be careful because self-employed is different to having your own company, right? So self-employed, when you're a sole trader, you are actually the business. So I would be, in my example, if I was, By the Book Accountancy Limited is my business. It's a limited company. But if I was Robin Thatcher trading as By the Book Accountancy, that's me. So any account that I open up might have the name By the Book Accountancy on it, but actually it's just me. So when you open a sole trader bank account, for example, the entity behind it is me. When you have a limited company, that's a separate legal entity. So in your example, if you're a limited company, you need to have your own corporate exchange account in the business name. As a sole trader or self-employed, it'd be slightly different because it'd be in your name underlying anyway. But yeah, so to give you that example again of the sort of receipt, when in accountancy we have what's called debits and credits, and I'm not going to teach you accountancy as a whole, but a credit is something. So sales are usually credits, right? So when I get a sale of £100, it credits sales and then debits, which means it increases the balance of my bank account, right? But in the Bitcoin world, when I credit sales £100, I have the corresponding debit that has to happen. That debit will be Bitcoin. So actually all that I'm debiting is investments. So in the background, that's what will happen. So it's just sort of where the money sits. But yeah, you would need to have that on a corporate account. It's really important for distinguishment. If I set up a personal account for my business in my name today, first of all, HMRC could argue anything that goes into it is in my name personally anyway. And then even if I didn't, it muddles in with my personal transactions. And then trying to do my business accounts would be an absolute nightmare because a year down the line, if you go back and look at a blockchain transaction and try and say, what was that? You'll never remember.
Yeah, super interesting. And then if we bring it back to kind of everyday examples, and I'm in Australia obviously at the moment, and we've got a few places around us that are merchants accepting Bitcoin, like a barbers or whatever. People that are further down the rabbit hole that want to start using Bitcoin as a medium of exchange rather than just stacking and hodling. What are the things to be mindful of for people that are either doing spend and replace or just spending $50 here and there on Lightning, for example?
So the trigger words you said there are spend and replace, right? So the most important thing for me is, in the UK, we have a rule called bed and breakfasting. I think in America it's called the wash rule. There's different ways of saying it, but it's effectively a 30-day rule. If I sell Bitcoin, say I or spend Bitcoin or trade, it's all the same for HMRC. But if I spend Bitcoin, if I spend £100 today, if I buy £100 of Bitcoin in the next 30 days, it effectively is what we call bed and breakfasting, where you've tried to sell it for a loss or a gain, whatever it is, but you bought back the same amount within 30 days. It just goes back to your original buy price. So spend and replace is a tactic that Bitcoiners use to effectively avoid the tax implications. So I can have, I use Wallet of Satoshi. So if I have my Wallet of Satoshi to zap someone when I go somewhere, if I spend 50 quid, as long as I buy back 50 quid the next day, I've got no tax implications to worry about anyway. So that's the way I do it. So generally speaking, as long as you buy back the same or even more, you can buy back more. It doesn't affect what you've had before you. And it's almost, it doesn't mean anything for tax. So if you spend and don't replace, the issue is you have to then really track what you've done, because in the UK we use something called a pooled cost base, which is your total cost base divided by number of Bitcoin to work out the cost per Bitcoin that you've got. If you then start selling 100 quids at a time by spending it, you have to work out what the difference is in your pool cost. Some softwares may struggle with that because they may not understand what you've done. You may have tax implications if you spent a decent amount over a year. Obviously, it has to be 3K of gains in the UK to be taxable, but you could go on the example that I'm not going to spend 3K, so I've got no gains that are going to be taxable. But then you need to keep records because your pooled cost is changing, and your records need to be up to date and book kept properly. So for me, spend and replace is the key one. If I spend 50 quid, I'll replace 50 quid, and it's nice and easy. I don't need to worry about it.
Yeah, cool. Yeah, that's a real simple way to go about it. And you kind of alluded to my next question there, which was, what do people have to be mindful of with that 3 grand capital gains buffer? If they're under that within the year, do they have to declare that? Can they just let that go? And what do people need to start reporting when the numbers get a bit bigger?
So the one thing I want to caveat here is there is a little known rule that says if you sell 50 grand or more of crypto, doesn't matter if it's profit or loss, you're meant to declare, right? I think most people won't do that, and I think that's absolutely fine. But I have to caveat that because in the rules officially it says that. If someone came to me and said, Robin, I've traded over 100K but not made any profit, I would always steer them and say, maybe don't file. Secondly, I don't want them to pay me for something they're getting no value for. So, that feels like if I told them to file, I'm just making money off something they're getting no value for, which I wouldn't like. So that's the first thing. The 3 grand is under that. You don't need to. If you're 3 grand under 3 grand of gains, you don't need to declare. That's fine. But you need to have records, right? Because we've talked about the sort of data HMRC are going to get. Them asking you, they start an inquiry usually with questions, basic questions about what you've done. When an inquiry comes, you need to be able to prove what you've said. I can sit here and go, oh yeah, I think I've only made 2 grand. But then if HMRC asks me and I can't prove that, that's a pointless mechanism. I can't prove that I've only made 2 grand. So you should always have records to back that up. The way I say it is the softwares we have, Recap, Coinly, those sorts of things, they're auditable. They're almost every transaction in theory. So if HMRC asks you, you can go, here's a CSV export of everything I've done. There you go. That's what I've done. I know people might go, oh, I don't want to give them all that data. But if they're asking you, it might be easier to just get them off your back. So those sorts of things are important. But the 3K is really important because once you go over that, you have to declare. You need to decide if you're comfortable with your records in declaring. If you know how to declare, are you going to pay someone to help you declare? The one thing, again, I don't want to do, and I see it a lot, is, oh, I've got loads of transactions, Robin, but I only made 4 grand, but I need you to check those transactions. Well, if I'm going to check all those transactions, I'm going to say, well, it's a lot of transactions. It's going to take me a lot of time, and therefore it's going to cost you a bit of money. And if they've only made 4 grand, I don't want to be saying, yeah, of that 4 grand, though, it's going to cost you 33% or 25% to pay me. That's counterproductive to me. It doesn't feel like I'm adding value to their life. So it's really important to be aware and keep track of what you can and do what you can in your own realms. I'm not going to lie, the tax of this is very complex and we would like to make it easier, but that's probably a long way away at the moment.
Super interesting, man. And how often would you say you have people come to you looking for advice, but actually they don't need it? And I know you said off screen that you're a Bitcoiner, obviously, which is massive value, but you want to always make sure that you've got your client's best interests at heart. So what are those conversations like, and where do you say, yep, you need me, versus no, I think you're okay?
It's a good question. So I'll tell you, one of my websites that I've got, so I created By the Book Accountancy Limited. And when I went into the crypto tax side of it, as I say, I'm a Bitcoiner, but when I went into the crypto tax side of it, because not all Bitcoiners need tax advice yet, I created cryptotaxhelp.co.uk. Crypto Tax Help actually schedules a call with me, but it says it's going to charge you £50. The reason it says that is because if someone comes to me with a recognizable inquiry that I'm going to be able to monetize afterwards, then I'll usually waive that fee. Most of the time, if it's shorter than 30 minutes, I'll waive the fee anyway. The fee's there to protect me a little bit because I can't have 15 inquiries a week where someone just wants to, spend time talking to me and getting information. I try and give as much value as I can. When people come to me, I do have a reasonable amount of conversations where people will just say to me, this is where I am. And I'll go, you don't need me, but this is what you should be doing in the short term, because I want to add value to them, and I want to make sure they're not going to walk into a high street account and get charged £500 for a piece of advice that may be wrong and probably won't help them in the long run anyway. Accountants are like lawyers, and there may be people watching this screaming at me as accountants, which I'm bad mouthing because I'm not. But part of the industry that I found really worrying is that accountants sometimes don't charge what's right. They charge what they can get away with. That's a quote from a book that I read recently. And they're like lawyers. Time is, chargeable. But what that means is, say you go to an accountant and ask for some advice, they won't always go, "Oh yeah, here's what our fee is," but you'll get an invoice at the end of it. Um, I like to not work that way. I only like to work on a basis that someone's A, happy to be charged, B, got value, and C, ideally agreed up front so that we all know where we stand. That way people can come and have a conversation with me. And if I feel there's chargeable work out of it, great, brilliant, let's work together. If not, hopefully I've built a bit of a relationship that in the future they'll come back to me, or they'll tell people. I don't know, how much research people would do on me, but I get a lot of referrals from Reddit. I get a lot of referrals from places I didn't even know I existed, but that's because people have spoken about it in an open forum. It's really difficult in the crypto and Bitcoin space because it can be quite dark. There's a lot of virtual things going on. There's a lot of people that aren't at meetups and face-to-faces and things like that. Therefore, finding people like me can be hard, but that's why, I'm happy to do things like this, just talk to people and help them understand that there are people out there that can help them.
Yeah. And I think to add on to that, help them, as in want to help them rather than want to shaft them, which is really, really cool. So let's move on to a topic that I know has a bit of division in the Bitcoin space in terms of Bitcoin loans. There's a lot of arguments that people don't want to post their Bitcoin as collateral because not your keys, not your coins, but the space is frozen.
I'm still here, mate.
You back? Cool. Let me start that bit again and I'll cut it out.
Sorry, mate.
It's all good. Let's talk a bit now about there's a bit of a divide in the Bitcoin space around this, but Bitcoin loans and posting your Bitcoin as collateral. Now, there's obviously the hardcore Bitcoiners that maybe aren't on board with this because not your keys, not your coins, you've got to post your Bitcoin as collateral. But I've seen some posts from you recently educating people around that space that are looking into loaning against their Bitcoin. Do you want to go into a bit of detail about what people perhaps need to look out for that they're not considering when they're looking into this?
Yeah, so some people may find this interesting. I'm happy to talk about it more in future if you want or anyone wants to. I think one of the things at the moment is we're pivoting from traditional assets into Bitcoin, right? And when people do that, let's use property as an example because it's a good example. It's a new thought process for people. Saylor talks about a Bitcoin yield. And at this moment, a lot of people are asking, when you buy a property, for example, there's two things that come into play: capital appreciation and rental yield, right? Bitcoin usually outpaces both of those combined, but what you don't have is you don't have that capital appreciation as money in your pocket like the yield of a rent would be. Rent is cash flow. Bitcoin doesn't have cash flow. So loans are providing that cash flow. That's where people are asking the questions. I've got my own thoughts on it. Absolutely, you're absolutely right. Not your keys, not your custody. So, that there's a third party risk to that. There's a leverage risk if Bitcoin drops that you over collateralize, need to collateralize more quickly to not get liquidated, all of those things. From a tax perspective, in the UK at the moment, the tax rules are not particularly great towards that. And that's because, in my opinion, we're very early on this loans journey. The example I'll give is when you get a mortgage on a house, a mortgage company will give you money against the value of your house, but they don't take ownership of your house. They put a charge against that house that says if they go to court, they will have a right to take that house off you because you've defaulted on the loan that they've given you. No such thing exists in Bitcoin at the moment, and it's very hard with self-custody. It's very hard to police something like that. If someone put a charge against my Bitcoin and then I defaulted on a loan, what's to stop me taking cold storage, multi-sig, whatever it is, with me and running away? The court can't stop that. The court can't seize it because they don't know what they're seizing. So there's a difficulty around that. So loan companies at the moment have to collateralize. The word I'll use, and if you don't understand it, it's fine, but whether they rehypothecate, which means use your Bitcoin for something, is different to whether they take custody, right? So most lenders will take custody of your Bitcoin in their own platform, in their own wallet. Doesn't mean they do anything. And it doesn't mean they rehypothecate it. It means they take custody, which means that they have beneficial ownership, right? A lot of people miss this because they think, oh, they haven't got beneficial ownership. Well, they have. If it's in their wallet, they've got beneficial ownership. If they were to go under tomorrow, it's their Bitcoin, not yours. So that's important. So in the UK, any change of beneficial ownership is taxable. So if I bought a Bitcoin for $10 15 years ago and loaned against it today, the likely scenario, depending on the smart contract, is that they take custody and therefore I have a taxable disposal and have a gain. So let's say I get 100% value of my Bitcoin at 80 grand, they give it me at 80 grand, but suddenly I've got a tax bill on pretty much 80 grand that I'm going to have to pay because I've realized the gain. It's not what you want and it's not what the aim is. So from a taxable perspective, it's not great. I'm not the most researched on lenders. I'm not going to say I've looked at every single lender, but my research shows me that most lenders do take beneficial ownership of your Bitcoin. I think there's an easy solution in future. I think when the market grows and interest rates get better, I think multi-sig solutions will work for this, where I'm the wallet owner, I have a signatory, someone else has a signatory at the lender, and then there's a third signatory, probably the platform, that will only release that Bitcoin to whoever when it's proven that either the loan is spent and paid off or that I've defaulted on it. But again, how that's, companies don't want to do that at the moment. Why would they want to go into that level of technical aspect when they can just take custody? When I look at, I've used personally Ledden just as an experiment. It's very easy, but it does appear to me, looking at the blockchain and the contract, that they do take custody. They don't rehypothecate. That's where people get lost. They think, oh, Ledden doesn't use my Bitcoin for anything. I'm pretty sure, 99% sure, in fact, that they take custody. Therefore, it's a taxable disposal. But I do like, the way things are working and going. I just think there's a lot of development that needs to happen in that space. The other thing I'll add is that we did write to HMRC probably a year ago now, asking them to change these rules and look at them. And my inkling is they are. So hopefully we might get some positive news on that in the future.
That's good to know, and hopefully of value if anyone's listening that's considering taking a loan out or perhaps already has. And I agree with you, we're still so early in the space. If you just look at all the new financial products that are being built as we speak, and it's still so early. So I think the choice and the options are only going to get better and better. And when the traditional finance world realizes how valuable Bitcoin is as collateral, then there's potentially going to be some better rates there for Bitcoiners to.
It just takes someone to take the initiative, but I think one of the issues is at the moment, the UK is on its own in those rules. I think the US is different, which means that when your US is your main market, you're not worried about that. But I do think from a self-custody perspective and all of those things, that there's so much more that lenders can do with the products. But at the moment, they're not really competitive either. The interest rates are quite high.
Yeah, there's lots of interesting stuff in the space that's developing real quick. Do you think there's any questions that I've missed that people could really benefit from knowing at this point in time?
There's so much. In complete honesty, there's so much you can cover within the tax. And I always say that everyone's circumstances are so different. There's, like I say, I could talk about lending and yields for ages. I'm in finance and Bitcoin is really an interesting subject to me, but not everyone will find that interesting or engaging. But there is a lot going on in the tax space. So the main thing I think people need to realize is it's not about how much you put in versus how much you take out. Everything within the blockchain sphere is taxable potentially. To give you the example I always give is, if you imagine I bought a house as an investment for 100 grand, and then after a few years it was worth 500,000, and then I swapped it for another house worth 500,000, that's still a taxable event, because HMRC don't care that I've swapped it for another house. They care that I've seen a £400,000 benefit in that example. And that's taxable, that benefit. Not when I take the money out, it's taxable when I see the benefit. That's the way tax works. So within crypto assets, Bitcoin, it becomes very difficult for people once they go into that sphere. They do a lot of chopping and changing. They think, I haven't got any tax to pay because I've not taken any money out. That's a big myth. Then the other thing is record keeping. The more you can keep on top of your record keeping, the better. Crypto and Bitcoin is like the equivalent of a really complex business. So not keeping any records is one of the biggest challenges I see, but not keeping any records can cost you tax, because ultimately the way HMRC would see it is if I bought Bitcoin for 10 grand years ago and then sold it for 80 grand today, I've got no blockchain records to prove I paid 10 grand for Bitcoin. If HMRC ever look into that, they can say, well, if you can't prove it, you should take zero cost and pay gains on 100% of your gain, because you can't prove that you paid 10 grand for it. You could have paid 50 grand for it, or you could have paid nothing for it. But if you can't prove it, we'll go to the nothing. And again, whether you agree with that, I'm not saying I agree with it. That's HMRC. That is what they're going to do. That's the government. That's the way they're going to do it. And then don't think that they can't go back and look at things. There's certain rules with looking back. People always have 6 years in mind. HMRC can go back 6 years as a matter of course. If illegality, if something illegal has happened, they can go back as long as they want. Tax evasion is technically illegal. Tax avoidance is a different thing. Tax avoidance is using the rules to your favor that they weren't necessarily written in. Tax evasion is just evading tax. That's illegal. So technically, they could probably argue they can go back as long as they want. So future-proof yourself against all of these things. I expect Bitcoin and crypto to, especially Bitcoin as it grows, I expect it to be queried a lot more. If someone has invested a lot of money and it's worth a lot of money in the future, I expect that will, bring them to attention. The same way, over the years, high net worth individuals are always looked at more deeper by the tax authorities, because the carrot at the end of it is a lot bigger. A 5% mistake on a 10 million portfolio is a lot bigger than a 5% mistake on a 10 grand portfolio. So those sort of things are important to consider.
Yeah, that's a great way to put it. It's the easiest in the future. Definitely, it's going to be the easiest way for them to get some cash for the government. So a question that did just come up as you were answering there is, in terms of inheritance tax, and let's just say my great-great-grandma, which I don't have, obviously, has 3 Bitcoin that she's just been sitting on for years and passes away. What does that process look like?
So this is one, I think I commented on something yesterday. I can't remember, but it's one that I found really interesting, because people always say to me, and I'll probably come back to this subject, but what if I lose my Bitcoin? What if I lose it in a boating accident? Well, when you die, your inheritance tax estate is actually valued on the value of your estate as at the time that you die. So technically, from a Bitcoin perspective, if you have 3 Bitcoin, it's valued at the time you die. So it's taxed for inheritance tax anyway. Now, the one issue there is that the bit of a caveat is that they can actually argue that that's regardless of whether your family and your heirs get the keys or not. So you could get an inheritance tax bill on Bitcoin that if the seed phrase is lost, you're never going to get access to, which seems ludicrous, right? But it's where it is at the moment. I'm hoping that will develop over time as more of these cases come up. If someone dies in custody of their Bitcoin, that forms part of their inheritance tax estate. So their inheritance tax is charged if your estate is over 325 grand, I think, at the moment, and it's 40%, so it's a big number. So as you get older, tax planning will become more important. You can you can have partially exempt transfers, they're called, where you gift something to someone, and as long as you live for 7 years afterwards, it doesn't form part of your inheritance tax estate. It's a horrible thing to have to say to people, but it's an important one. So you need to be planning early. There are ways to plan. You can think about companies. You can think about, because share transfers are a bit easy. You can think about all of these, or gifting it bit by bit. You get £3,000 tax-free gifts every year. So even if you die within 7 years, the 3,000 is tax-free. Like I say, you can gift more, but you have to live for 7 years afterwards. So you need to plan really about what you're going to do and how you're going to do it, and probably have in mind what your inheritance tax estate is going to be. They've recently changed it so pensions are part of your inheritance tax estate, which they never used to be, which is a big problem for people who are of a certain age now, because they've probably been saving in their pension thinking, my family won't pay inheritance tax on it, and now suddenly they will. For me, it's more of a reason to think about where you keep things in terms of the entity. Like, is it in your personal name? Is it in a pension? Is it in a company? And then you need to plan how you transfer that to your heirs as and when the time comes. And then obviously with Bitcoin, estate planning is important. I've done my estate plan to ensure that in my will there is an addendum, a secure addendum that it's not seed phrases or anything else, but it shows people how they can rebuild my wallets, who the multi-sigs are, etc., so that if they need to access it, if I get hit by a bus tomorrow, it doesn't just die with me, which is probably my biggest concern. I suddenly realized that it was a single point of failure. It's great being self-sovereign, and I totally agree with it, but you also need to, look at those custody side of things. People talk about time locks, those sorts of things. It's all considerations. It's complex. And when the time comes, getting an estate lawyer who understands it can be important. Getting an accountant who understands it can be important, just so you can start doing the right things and asking the right questions.
Yeah, and it's awesome that, I mean, there obviously is in all industries, but what your point there is, it's important to highlight, I think, and it's almost, in my opinion, worth paying more of a premium to someone like you who really understands the space than going to a typical accountant that could just rip you off without you knowing any better. So
yeah, I was just going to say, they can also give you bad advice. So the thing I see in tax at the moment that annoys me from a tax side is people will come to me and go, I did this last year, but my accountant said it was okay to do it this way. And I know this sounds horrible and I hate saying it, but in accountancy, one of the things is when I send something to a client, they sign it off. So they're liable for it. So yes, I could be liable if I give you bad advice, but if I speak to someone on the phone and say, you don't need to pay tax until you cash it out, and then they don't pay tax and get inspected, they could say, oh, well, this accountant told me that I only had to pay tax when I cashed out. If there's no email trail, what can you prove? I didn't give you bad advice. I gave you something on the phone. I'm not saying that, but that does happen. I've seen it happen. I've seen people come to me and go, I did this. And I'm like, yeah, that's not compliant. And that's scary. They probably paid for that advice as well. So yeah, make sure you sort of know that the person you're dealing with understands what they're talking about.
And has your best interests at heart. I know I keep banging on about this, but just listening to you there, it brought to my attention again. I spoke to a financial advisor. I didn't go out of my way to speak to one. I was playing golf with my mate who brought his financial advisor friend 2 years ago. And I asked him about Bitcoin, and he was like, you don't want to buy any Bitcoin, man. That's too risky. And if you do, you only want a tiny percentage. And that's another example, I think, where there are financial advisors that understand Bitcoin, and you want to listen to those people that have experience in the Bitcoin space, similar to you as an accountant in the space, similar to other professions, but they need to have experience in the Bitcoin space, because otherwise, like you said, you can get left behind with bad advice and ultimately just pouring money down the drain.
I know a fair few Bitcoin financial advisors, but in the UK, we have quite strict rules on the products that are available in traditional finance and what advice can be given against those products. So although I know Bitcoin are financial advisors, they can't recommend Bitcoin to a lot of their clients, right? So, and the other thing is, and this is me, I've never asked a financial advisor this, and my friend Dan, the Bitcoin IFA, will probably tell me off for saying this, but I've always thought, why would I need a financial advisor when their vested interest is the product I invest in and the commission they get, not the return I get on that product? I've never really understood that. I'm happy for an IFA to come to me and tell me that I'm wrong and this is how it works, but that's always been a concern of mine. But then, like I say, if they can't recommend the products to you because it's outside of their sphere of products they can recommend, what use is that to you, really? And like I say, if I've made the decision of what I want to do, I don't need someone to then tell me that they don't agree with my decision, which sort of counter produces what I'm trying to do. So I think, yeah, I totally agree. But I think a lot of that is down to the traditional, the FCA, for example, HMRC, the government, and their stance towards it is very negative at the moment. It's one of the highest growth assets in the world. And yet in the UK, we're being talked out of it and pushed out of it by our own governments and the people in charge. So yeah, that is difficult.
Yeah, and that's ultimately what led me to start doing the podcast, was to help people that are just seeing this FUD and bad press around Bitcoin in the UK, especially, to help them see a different picture. Like just last week, I got a message from my grandma saying, with a picture from the news saying that Bitcoin and fraud incident, blah, blah, blah. And she was like, please just be careful. there's so much fraud going on in Bitcoin. And she's obviously doing it from a place of love and care, but these people are missing out on one of the most asymmetric upside opportunities if measured in fiat just on its own. But if you then start going down the rabbit holes and into sovereignty, into what Bitcoin actually is, as well as number gut technology, they're missing out on all of that because of the FUD coming from the news, coming from the government.
So you have to look at the one that taught me that the example I'll always give was, I remember reading BBC News about the 61,000 Bitcoin that was seized from a Chinese woman who was working for a major money laundering gang in the EU. Now, if you actually go to the base of that story, there is a woman who was working for a massive gang in the EU laundering their money through Bitcoin, right? The story there is not Bitcoin. They're trying to say Bitcoin facilitated it. It didn't. If it went through NatWest Bank, would they have reported it as NatWest Bank was the problem? Absolutely not. They reported it as Bitcoin being the problem. That was the narrative they spun. Bitcoin was irrelevant in that story, really. It's about decentralization and privacy, yes, but as I say, privacy is not a crime, right? There was other things that are in there that she managed to bypass that were the problem. I don't know what exchange she used, but obviously if she used an exchange, their protocols were not suffice. They should have checked more about what she was doing if she was taking money off exchanges. UK exchanges will absolutely compliance check you if you try and withdraw Bitcoin. They'll try and go back to the source of where it is. That's anti-money laundering. That's not to do with Bitcoin, right? So I think the way it's reported is very important. And the other thing I'll add to that is, one of the things we see at the moment as a barrier to entry as well is complexity. So the reason we want these traditional finance products is not because I believe in paper Bitcoin, as I call it, because actually I like to self-custody Bitcoin, but everyone has their journey, and tax efficient products like ISAs and pensions should have access to Bitcoin products. And then also people should have the ease that their biggest problem to buying Bitcoin is opening a broker account, not opening an exchange, going through KYC, understanding wallet addresses and how they work, understanding how to deposit money in and out with banking regulations and restrictions. All of those things create problems. If we look at someone of the older generation, they might not be as digital as us. So therefore, having a broker account, depositing into there, and then being able to get Bitcoin exposure is a lot easier than trying to buy and self-custody Bitcoin at day one. They might get there in year 5, that's fine, but they won't be there at day one.
Yeah, and there's so much education needed in the space. It's crazy to me. Like, I spoke to a guy the other day that's been in Bitcoin since 2017, and only 3 months ago as he started looking into self-custody. That's crazy to me. I was fortunate that my first journey into Bitcoin, I took a course, take the cry out of crypto, and it was the best thing I could have ever done because it taught you about sovereignty, self-custody, and the Bitcoin fundamentals. And it's empowering, but like you said, it's maybe not for everyone, especially the older generation. But I do think it's an essential part on the journey, especially for the younger generation going forwards with potentially what's to come.
I am seeing more. I mean, the thing is with self-custody is you also have to be very private about it, which can make it very difficult to find the right research out there. For example, I watched a lot of BTC sessions because he's brilliant and he teaches you about all different custodies and how to set them up. I think that's great. There are providers out there, I think there's one called Sound Money IO, the Bitcoin Advisor, the Bitcoin Way. They all give you real extreme, how to set up end-to-end self-custody solutions. And I think probably a lot more of that's needed, but it's also very difficult to have that conversation with someone on something so private. So I totally agree with you. I think the education piece is important. I also think, what's best is subjective to some people. For example, some people might use a third-party multi-sig wallet, but actually then there's an argument that are you self-sovereign because technically someone else could access your Bitcoin. They're not going to, but they could. The idea being that that's an estate planning tool that if something happened to you, they can then access it, sign it off to go to your family. That's the idea of it. But some people, purists, would say, well, you're not self-sovereign then. And then, being self-sovereign, how do you record that data in a way that's protecting it, but your heirs can access it? That's important. All of those things are so subjective to each person, and there's not you're right. There's not a huge amount of content on it, but having that conversation with someone can also be very difficult because, that's very personal data.
Yeah, I think there's a balance there in how to do it. I know the Bitcoin Way, Tony at the Bitcoin Way does an amazing job with that stuff, but I also think there's even a lower barrier to entry where just by compiling the correct resources for someone to go through it themselves, if they don't want you on the other end of the phone, is super valuable in itself. Because what's the cost? The time cost, the risk of setting things up wrong. There's so many different costs to consider from getting your self-custody wrong.
Yeah. Do you know what else I'd add to that? Use AI. I have conversations with AI all the time, and someone's going to be sitting there screaming at me going, I don't know how secure those conversations are. Okay, that's fair enough. But if you ask AI different questions, it will give you different solutions. And actually, it's really interesting to see what it says because it comes up with the most measured solution. I mean, I started off a conversation by saying, what's the perfect self-custody solution for Bitcoin? And my God, did I go down a rabbit hole. I spent about an hour and a half having a conversation with it. And it was really interesting, but at the same time, it was very complex.
Yeah. And that's, I think basic levels of self-custody are simple. They're just new. So people get confronted, they get fearful, they get confused, but it's just the steps are quite simple. Now, you can obviously make that much more complex with geographical distributions, multi-sigs, all of this kind of stuff, but that really depends where you are on the journey. Robin, I'm mindful of the time. I've got to shoot, and I appreciate you giving up your time to come on here and drop some wisdom and help. I want to hand the mic over to you, but before I do that, where can people find you? I'll drop that in the description as well, but what's the best place for people to reach out if they need help, and perhaps what should they reach out for and what should they not reach out for so that your time's respected as well?
Yeah, of course. So I'm at buythebookaccountancy.co.uk, cryptotaxhelp.co.uk, or you can find me on X. I can't remember my handle because it's at Secret Invest 2, I think, but I'm the Bitcoin and crypto accountant. So if you search for that, you will find me. And yeah, I'm pretty much an open book. If someone wants to message me and go, how much would you charge for X, Y, and Z? Obviously, the more detail you give me, I'll always quote up front. Or if someone just wants to ask a basic question, I'll happily try and help. Like I always say, please, value my time, understand that I can't just spend hours on the phone, but I'm happy to help in any way I can. And, Bitcoin for the win, as I always say.
Yeah, absolutely. And is there anything that I've missed that you think's important to leave, or is there anything you'd like to close us out with?
I think there'd be loads of things that people might have on their mind, but that's why I always say I'm pretty open. I did a post a couple of days ago where I said, just post the topic you want me to discuss because there'll be 10 different answers. But I'm always happy to try and help where I can. I want to spread knowledge. And I think that, people might look at, what do you get out of that? Well, long term, I want to be the Bitcoin accountant of choice. I want to work with Bitcoiners. So, that's what my goal is, to spread knowledge. I speak at events. I give up a lot of my time where possible and run a full-time business and have a family to try and be that person that people turn to in the future. And I get the pleasure of meeting and speaking to Bitcoiners. To me, this conversation is enjoyable. I love it.
Robin, thanks again for jumping on, man. Really, really, really insightful stuff. Guys, if you enjoyed this, make sure you check the description to follow Robin. And perhaps in 2026, once these new regulations come in, we can jump on another episode and discuss things a bit further.
Always happy to, mate.
Awesome. Cool. Guys, see you on the next one.